Is the dollar yen heading above 160? Hey everyone, welcome back to the channel with me, Fawad Razaqzada, market analyst with StoneX. Today we are breaking down the dollar yen currency pair, which continues to point higher. Let's jump straight in. The yen has been among the weakest of major currencies ever since risk assets bottomed in April of last year. While some of the yen's weakness can be explained away by the big risk rally, much of it has to do with domestic factors and specifically about the nation's growing debt to GDP ratio. Investors are worried that the government's plans to sharply expand fiscal policy is not going to lead to sustainable GDP growth, questioning the rationale at a time when the Bank of Japan is also tightening monetary policy. In other words, Japan is pressing the accelerator and brake at the same time. That sort of policy mix is usually not sustainable, and this has been reflected in bond yields climbing steadily while the Japanese yen has been weakening across the board. Investors are basically demanding better fiscal discipline from the government, but so far all they are getting is some lousy verbal warnings. But will they intervene soon? Based on Japan's FX intervention playbook from July of 2024, Japanese authorities may still prefer to wait for a clear dollar negative catalyst before stepping in. Back then, intervention began with the spot close to 160 level, so we're still some 300 pips or so away from that level at the time of this recording. For now, the Japanese yen remains vulnerable to further downside, potentially meaning that the dollar yen could rise above 160. That level could attract some resistance, with many analysts view it as the government's informal line in the sand before it potentially intervenes. We kind of had one or two catalysts that could have driven the dollar lower, but so far there's been little evidence of that. First, it was the Department of Justice probe into Jerome Powell, but the pushback from several Republican lawmakers have eased concerns about risks to the independence of the Federal Reserve. Second, we had consumer inflation data come in slightly weaker than expected, at least on the core front anyway. Core CPI rose by 0.2% month over month in December against expectations for a rise of 0.3% on the month. But the headline measure was bang in line with the estimates and the dollar barely flinched. Looking ahead, we have US PPI and retail sales landing on Wednesday, followed by some jobless claims data on Thursday, along with several Fed speakers. One other potentially market-moving event that investors will need to be watching is the Supreme Court's ruling on Trump's tariffs. A potentially unfavorable ruling could emerge at some point this week, and that may lend further support to the dollar. So the latest forecast remains bullish on the dollar yen forecast, and if you found this update helpful, don't forget to like and subscribe. Thanks for watching, and I'll see you in the next one. Take care.